Brad Stafford here with MarketClub.com and part 3 in developing your premium portfolio. Part 3 I'm going to cover very simply filtering. Filtering basically comes in two forms. One, technical filtering, where you take a look at a chart, you analyze the different technical indicators that you can use, and then determine the overall trend or if a position is ripe for the taking, so to speak. Filtering number 2 is filtering external viewpoints, filtering news, filtering what people tell you, and then processing that into really what you deem a good trade or a bad trade. Let's take a look at the technical filtering first. What I'd like to do is just take a look at our NASDAQ Google chart over here. Now, taking a look at this, the technical analysis, the trend analysis that we use is basically saying that there's a weak uptrend for Google. The last hour close is above the 5-hour moving average, and a number of other different scores to basically give us a total score of plus 65. So what's that telling us? I don't know. You know, the market is very hard to read. The technical analysis is very hard to get into, and really you can only get a snapshot from a couple different moving averages and different highs and lows. And what I like to do is actually get into a chart and put a little bit more onto the chart to help me really determine whether or not there's a good trade to be had or not. So what I'm going to do is I'm going to bring up the live chart for Google, and I'm going to take a look at a couple technical indicators. So here we have our live chart of Google, and what I'm going to do first is let's go ahead and get over to our monthly trend, because we want to look at the long-term trend of this market. As far as using the first technical indicator, we want to look at the longer-term trend. So that being said, using our trade triangles approach, our long-term trend, we're actually seeing that May 31st, we were actually recommended to get long this market. Basically, our filtering would have told us, okay, this is just one piece of information. This is telling me that I should be getting into a long position. The market could be going up in an upward direction. The other indicator that I personally like to use is the slow stochastic. This is just me. Then this is just my personal opinion. That being said, looking around the same time of this indicator, you can see that the last time the averages actually crossed was a little bit before that, which in reality would have put us at right here as a potential entry point at the 440 mark. But getting in here might not have been a good position, because looking back a little bit further, we can see that they crossed here again, and it basically stayed in a flat position. So the crossing of the slow stochastic could tell us one thing, could tell us another. Now for me, I read them a little bit different than everybody else. And to be honest, using a technical indicator that you're comfortable with, that you're familiar with, is something that's going to help you understand and filter out the market and what some indicators are saying over the other. For example, some people like to use the MACD. They plug in their MACD indicators, and taking a look at the MACD indicators right where this has not crossed yet. Looking at the MACD, we would have actually seen the cross a little bit further up and would have gotten in closer, actually a little bit on this pullback, closer to the 500, 520 range. So that being said, it's just another thing that's going to help you filter it. Now, I'm kind of a fan of the trade triangles, because I like the setup. I like the profits that are potentially there, and just taking a look at it here, if I would have just taken this position without using my slow stochastic, I would have actually gotten into quite a good trade at 506, and I would actually still be long this trade. Now, filtering is through the technical analysis, and the stock market is great, but what if you're a futures or a forex trader? Let's actually take a look at how about we take a look at soybean oil for March, BO.H08. I'm going to bring up the live chart. and looking at it here, and using the indicators, the trade triangles indicators, we actually like to look at the weekly time period, at the weekly trends for an overall trend identifier. Whereas with the monthly, we're using for the stocks, we're using the monthly. So that being said, and I still have my slow stochastic saved here, our latest MarketClub signal came September 4th at 38.30 to get long this market. Now looking at our slow stochastic, we can see that the actual cross came back here, which would have put us closer to the, let's see what point that would have been at. Let me bring up my display data feature and bring down to the chart. Probably would have been close to the $36, $37 range. So you could have got in a lot sooner, really, in a lot better position than here. But again, you want to take every indicator, you want to take every cross with a grain of salt, because that being said, if we would just continue to follow the crosses, then we would have potentially shorted here and lost our hat, as the market has recrossed here and continued to gone up. And as of right now, it's at 47.22, which would have been another great trade for us. Now, the second type of filtering that I want to get into is the news filter, so to speak, the friend filter, where you have a buddy that knows a buddy that says, "Oh, I know Bear Stearns, for example, is going to be a great long trade for 2007." Man, that friend would have been sorely mistaken. A great example that I have, I guess it was about 8 months ago. I was at our local Ruth Chris Steakhouse here in Annapolis, and the manager, who I've sort of become friends with, told me, he goes, "You know, Brad, I want to tell you that the stock market is going to do well for Ruth Chris this year. We've got a lot of big stuff planned. We're doing this, we're doing that." And boy, all the hype he was feeding me, I was starting to get interested. I was starting to get excited about it. So what I did, as opposed to take his word on it that Ruth Chris is going to be a $20 a share stock, I actually just added it to my portfolio and put it on a watch list. And just taking a look at the symbol over here, he gave me the big speech. I guess right around the July mark, and as you can see, it's just continued to take a nosedive. And if I would have got in on this position long, I would have been stopped out very quickly. If I would have taken basically the exact opposite of his advice, I would have been in a great trade. But who knows? He could have been right, could have gone up. That's where you use your technical indicators, your technical analysis, to get a little bit deeper into it. Another feature that you can use to basically filter out and look through more headlines, we have a market headlines tool within MarketClub, and you can do searches for soybean oil, for example, and bring up the latest information that has anything to do with soybean oil or agriculturals or anything that really is applicable to the markets that you're trading, the stocks that you're trading. This is Brad Stafford from MarketClub.com, thanking you for taking advantage of the series that I put together, developing a premium portfolio. I hope it's helped. If you have any questions or comments, please don't hesitate to give us a call or shoot us an email. Our phone number here at INO and MarketClub is 1-800-538-7424, or you can email us at support@INO.com. This is Brad Stafford from MarketClub.com. Great trading and good luck.